Hello traders, Gary Wagner here, 11:22 in Honolulu, 5:22 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 24th day of June, 2022, and this is the Daily Report for Gold and Silver, our weekend review. Now, for a second consecutive week, we do have gold trading lower on the week, as well as slightly lower on the day. Gold futures basis, the most active August contract, is currently down $1.70 and fixed at $1,828.10. That is occurring with dollar weakness at the same time. The dollar is currently down about 0.3% at 103.895. Lastly, silver had gains on the day today of about 0.4%, $21.13 for an ounce of silver. Unquestionably, recent moves in gold have been fully driven by news events, the thought of a more aggressive Federal Reserve when it comes to their monetary policy that will include a series of continued interest rate hikes. This month, we saw the Fed raise rates by 0.75% in unusually aggressive move for the Federal Reserve. They have not done that in quite some time. And so on a technical basis, what we have been looking at was the fact that gold had broken through some key areas. First of all, the 200-day moving average, that resides at $1,843. Gold is currently at $1,828. And then below that is the 61.8% Fibonacci retracement. And that retracement is from an extremely long data set beginning last year when gold was trading at $1,679 up to this year's high at $2,078. So the 61.8% retracement level is very important. But you can also notice that we have drawn a series of trend lines simply following a series of lower highs that have come in the market as well as higher lows. Because what we have noticed when we look at these series of highs from the high in March, the next one was definitively a lower high, and then this last one was a lower high. In terms of the lows, we've had a series of higher lows, beginning with this low in May, and then these two lows that have come in this month in June. We are quickly approaching the apex of the triangle, which means in theory it should be building pressure as that range compresses, and once it hits the apex, you get a release of energy, either up or down, but typically it will break to the prevalent trend direction, which in the case of gold right now is lower. If that does occur, what are the levels we want to look at? Well, first and foremost, there's a key psychological level at every what I call century mark. So that's the first area that we want to look at. What we can see when we look at this area is there has been very loosely a period of time in which it acted as support. Below that is the 78% retracement level. That comes in at about 1766. And again, historically speaking, we can see evidence that there were points in time in which this price point acted as a support level rather than a resistance level. While the compression triangle reveals the potential of a major price change further down the road, in terms of our short-term analysis, we have to look really at the recent lows that have come in. Yes, we have had a series of higher lows in the market, but what is interesting is once we fixed this trend line from these two lows here, you can see that today's low came just at and to the bottom of this support line. Therefore, we could see a bounce next week, taking prices as high as the upper level resistance line before moving back down. So we could see gold trade higher next week. This has been Gary Wagner wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.